The local share market surges following a massive boost from Wall Street. The shocking truth behind the gender pay gap and the big money on offer for the new wave of social media stars. It's Tuesday, the 28th of June, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
What do you reckon Sean Aylmer is doing right now? I reckon he's having a cocktail.
Sunning himself. Bit of beach time, and yes, no doubt, a cocktail. Well earned too.
Yes, I would agree. At least after the stress with the passports, you can imagine the first few days will just be filled with many cocktails.
He's got a long way to climb down to relax after that.
Yep, I think you might be right. Now, after the show, you've had a really interesting chat today with Christian Colding from BIS Oxford Economics. It's all about salaries and really kind of whether now's a good time to ask for a pay rise.
Yes, and who doesn't want to know the answer to that question? So this story has got a lot of data in it, a lot of insights about what's going on in the employment market and what employers need to look out for.
Saying that an interview has a lot of data in it, I don't know whether that's really a strong selling point for anyone except for you, Adam.
It's the themes that I'll be talking about, Michael, not just the numbers.
Well, I look forward to it. It's coming up in a little while, but our lead story today is all about the local share market yesterday because it was a cracking day for the local bourse. The S&P ASX 200 closed up nearly 2% to 6,706 points. We talked yesterday, Adam, about the very strong lead-in from Wall Street on the weekend, so it was always likely to be a pretty good day. But then all 11 sectors climbed yesterday. 173 companies in the top 200 had share price increases, 8 stayed flat, 19 fell. So overall, it could be described as a pretty broad-based rally. The biggest boost, though, came from the banks.
That's right. The financial sector posted the biggest gain overall. Commonwealth Bank, NAB, ANZ and Westpac were all up between 2 and 4%. And at their scale, you know that makes a big impact on the index. The tech sector continued its rally from Friday as well. Both Megaport and SiteMinder were up about 9%.
And Adam, within the overall numbers yesterday, there was some really interesting stories like this one. I think this would be my favorite. The best performer on the ASX 200 yesterday was actually the biotech company Imugene, and its share price closed up a whopping 45%, which is an absolutely massive one-day gain. But it came off the back of some really positive news about trials of a treatment for gastric cancers.
And Michael, as we know, if this can come through, what it will impact in a positive way in people's lives who are suffering from abdominal cancer will be so meaningful.
Yeah, absolutely.
Now, another one is an update on a story that Sean has mentioned quite a few times along the way. Superannuation administrator and share registry company Link Administration Holdings had previously received a $2.8 billion takeover offer from Canadian cloud-based software group Dye & Durham. It seems Dye & Durham have been reviewing the Link business and now they've reduced their offer by 20%. Due to recent weakness on financial markets. That values Link at $2.2 billion and caused investors and analysts to question the low offer. Still, Link's share price closed up 4% yesterday to $3.84, which is south of the new $4.30 offer.
Another story worth mentioning from within the overall share market movements yesterday is lithium. Now, lithium, which is obviously a key component of batteries and pretty important as well for renewable energy, it hasn't had the best run in recent weeks, but in the last few days, it's been making a bit of a comeback. Core Lithium and Liontown were both up more than 11% yesterday. Lake Resources was up another 7.5% after its disastrous listing last week on the ASX when its managing director quit right before the company debuted on the stock market.
Spectacular. And another quick one, some of the gold miners had a shocker. Evolution Mining was the worst performer on the bourse, down almost 22% after lowering production guidance.
It was a very big day overall and a very timely reminder of why it is so important to get professional advice before making investment decisions. We are definitely not an investing podcast, so you do need to speak to a professional. Adam, what is happening on international markets?
Crude oil slipped below US $107 per barrel as the group of 7 nations discussed a price cap mechanism on Russian oil. Gold jumped above US $1,830 an ounce, with some plans to put a ban on bullion from Russia. And the Aussie dollar weakened slightly to US 69 cents.
All right, we'll be back in a moment with the rest of the day's business news. Adam, I mentioned this one at the top of the show. There's a confronting report out that has confirmed a pretty ordinary fact, really. Men earn more than women at every stage of their working lives. Now, this is a study from the Workplace Gender Equality Agency, and it shows that men are the ones overwhelmingly in the more highly paid full-time executive positions.
Yeah, that's right, Michael. And another key finding is that the majority of women are not working full-time. Now, this obviously has huge implications for their career prospects and their earnings capacity. And when you break it all down, the data is pretty horrifying. The report looked at the number of women working across various ages. At no age bracket were more than 50% of women working full-time. Yet for most organisations, the top positions only seem to go to full-time workers, and that means many women were not reaching the highest managerial levels.
Now, the Workplace Gender Equality Agency said that the gender pay gap widens when women turn 35, when they then earn about $7.78 for every $10 earned by male colleagues. After 55, men are twice as likely to be in management roles than women. And in the age group 55 to 64, men earn more than $40,000 a year more than women. And even if a woman makes it to the very top, her salary is still likely to be lower than a man's.
Yes, and I thought that was a pretty startling figure. On average, a female CEO or senior executive will be paid about $93,000 less. Federal Minister for Women, Katie Gallagher, said there was significant work to do, while Mary Wooldridge, who heads up the agency that did the report, said some companies might have used the pandemic for cover.
Well, it's certainly front and centre now, and so hopefully this report leads to a conversation which in turn leads to some long overdue meaningful change. Now, Adam, moving on to politics, Prime Minister Anthony Albanese has made his first visit to Australian troops overseas since becoming PM. He stopped at a base in the United Arab Emirates on his way to the NATO summit in Madrid. We talked a bit about that yesterday. But while in the UAE, he laid a wreath with his partner Jodie Hayden and thanked ADF members for their service, particularly during the evacuation of civilians from Afghanistan.
It's also been reported that Anthony Albanese has spoken with Solomon Island Prime Minister Manessa Sogavare. It's the pair's first call since the election and follows the signing of the security deal between China and the Solomon Islands earlier this year. Apparently, it was a good conversation, which can cover a whole lot of things in diplomatic speak.
It certainly can. And it's good to see as well, Adam, that the PM's international efforts have a bit of bipartisan support. Coalition Foreign Affairs spokesman Simon Birmingham says meeting with plenty of international partners is the right thing to do and that it's welcomed. Look, often both parties do support international measures, but it's just good to see that it's being declared so publicly.
Yeah, when it comes to representing Australia, I think it's great to see that this is an international game and unilateral support.
Yeah, absolutely. Now, Adam, it's been a fairly uncertain time with market volatility disrupting a lot of plans, but there's speculation of a bit of activity involving a couple of prominent businesses.
Yes, the Australian has raised the possibility that the Singaporean owner of Optus might consider an initial public offering, an IPO. That would put one of Australia's largest telecommunication companies, thought to be worth between $8 billion to $12 billion, on the market. Goldman Sachs and Morgan Stanley are reported to be working with Optus on the project, but there are no immediate plans to launch an IPO, so this one remains one to watch.
And separately, the Financial Review reports that Suncorp is conducting a strategic review of the alternatives for its banking operations, which could be worth in the vicinity of $5 billion. The options being considered will have to factor in, of course, the timing amongst the current trading market, the potential buyers, and also then what to do with the proceeds if the sale does indeed go ahead. Now, Adam, I think this next story, look, it would almost be comical except for the fact that it is so serious with some pretty serious repercussions. Around 600 websites claiming to be the Australian Tax Office have been taken down. 600. Now, this is basically just scammers doing their best to take advantage of everyday Australians and their businesses. The warning is being issued now because the end of the financial year is getting very, very close and people are getting more active in preparing their tax.
It is pretty brazen, isn't it? So hackers can't get into the ATO website to steal details, so they set up an imitation website instead. The ATO is also warning businesses that they should move away from emails and PDFs for issuing invoices. It's just too vulnerable. It can be easily intercepted and the data can be stolen. So dedicated invoicing software with security built in might be a better option.
All right, now just a quick one for you, Adam. Greenhouse gas emissions continue to rise. In 2021, Australia produced another 4.1 million additional tonnes, according to the federal government.
Yeah, and the results highlight there's still so much to be done for climate change. The pandemic and drought contributed to some lessening in economic activity, which had in turn helped to restrict emissions to some extent. But there is still a lot to do in terms of reaching Australia's greenhouse gas emission targets.
And speaking of the pandemic there, Adam, apparently the neighbourhood shopping centre is back. Lockdowns made shopping locally the thing to do, obviously, and when the pandemic was at its height, many shoppers really had no alternative other than to go to the nearest supermarket. But Metcash, which operates IGA, has told the Financial Review that this might actually be a long-term shift, that now that things are open again, that still that trend of shopping locally has actually continued. Customers have tried their local store and decided to stick with it.
Now, Michael, it's certainly the truth for me. Do you still use your local shops?
Yes, the thing is, my local is really kind of one of the big ones anyway, the Woolies and the Coles. So
you are truly blessed.
Yes. And you know what? What we have done that's continued from during the pandemic is really kind of embrace the click and collect and the direct to boot services. Ooh. That we kind of started doing that a lot during the pandemic, during lockdowns. And I don't think we will ever go back to just the normal Sunday afternoon shopping within the supermarket. It will always be direct to boot for this household.
Direct to boot. I have so much to learn. Well, back to Metcash. New CEO Doug Jones said the company won't be spooked by rising inflation and will work closely with their 1,341 IGA stores to retain competitive pricing. But he says food inflation has surged in recent months, and I think we've all seen that, with suppliers asking for multiple price hikes. Net profit in the year to April 30 rose 2.7% to $245 million, and Metcash shares closed up 4% yesterday.
And finally, Adam, we have to talk about this one because we love everything to do with space and aircraft and all of that. This combines all of it into one. It looks like Australia's space industry is taking off.
Oh, well done.
Thank you. Wasn't planned at all. Early yesterday morning, Australia was home to its first rocket launch in more than 25 years, which was also actually NASA's first from a commercial site outside of the US.
It is so great. The successful launch of a rocket from Arnhem Space Centre in the Northern Territory has underlined Australia's increasing focus on the skies above. The rocket will conduct astrophysical studies and is the first of 3 launches that are planned.
All right, now moving on to overseas news, and the organisation that I guess you could describe as the central bank for central banks is raising concerns about inflation. The Bank for International Settlements helps coordinate global economic activity through its relationship with central banks around the world, so it carries a lot of weight.
The BIS warned that the most urgent and important task for central banks around the world is to tackle inflation. It said, quote, persistently high inflation poses the risks of switching to a high inflation era, end of quote. The BIS also said lessons from the 1970s suggest if the right measures are undertaken, it is possible to make a soft landing for the economy, but that could mean raising interest rates quickly and pose questions over future wage growth.
Okay, now Russia, Adam, has defaulted on foreign debt for the first time in more than a century. There have been obviously tough sanctions imposed on Moscow by the West in response to the invasion of Ukraine, and now Russia has run out of time to pay about $100 million in interest payments.
Yes, so there was a grace period of a month, but that has now lapsed. And one analyst describing it as one of the big watershed defaults in history. The last time Russia defaulted on foreign debt was under Lenin in 1918. For its part, Russia says that it has the funds to cover any bills, and it's been forced into this position by the West. But Bloomberg reports that given the damage already done to the Russian economy and markets, the default is largely symbolic.
All right, now finally, Adam, something a little bit lighter to finish on. Actually, it's a whole lot lighter for us to finish on. You know how fear and greed recently joined the world of TikTok?
Oh, I do, Michael. I'm a keen enthusiast, as you know.
Yes, I know you are. There is a new #1 TikTok creator in the world. He is 22-year-old Cubby Lame. He has almost 150 million followers on the social media platform, so a few more than Fear and Greed.
Just ahead.
He makes short videos where he basically pokes fun at other people's videos. I don't know whether you've ever seen his videos, Adam. I'm going to go out on a limb here and say you probably haven't. He basically just ridicules other people who take to TikTok to promote ridiculous life hacks where they will come up with a really elaborate way of doing something that is done much more simply. And he just points out that it can be done more simply using everyday appliances.
I might enjoy this, fella.
Look, it's very positive. It's all very G-rated, and it is very lucrative. He's worth about $20 million.
Oh, okay. Well, that's inspiring. Now, you know, Michael, that I have the occasional challenge with the TikTok machine. Do you think this is my time to sharpen my TikTok skills and jump in?
Well, Adam, you can start by sharpening your Instagram skills and your Facebook skills and your LinkedIn skills and just add TikTok to the list.
Okay. So first crawl, then I can walk.
Yes. Yeah. You have quite some distance to go between the two.
Okay.
All right. But you can follow Fear and Greed on TikTok. Just search for Fear and Greed Podcast and you can see our videos that we put up there. We have a long way to go before we get to the level of Cubby Lame, but we can always dream, can't we, Adam?
Yeah. Reach for the stars.
All right. Now, up next is the Fear and Greed Daily interview with Christian Colding. Christian is the head of consulting at BIS Oxford Economics, who helped compile the Hayes Salary Guide for 2022-2023, which looks at some of the key trends in wages, employment, a wealth of other insights too. It is a really good chat. It is worth sticking around for. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Adam.
Thank you, Michael.
It's Tuesday, the 28th of June, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And why not have a go at listening to us as well through your smart speaker? All you need to do is say, play the Fear and Greed podcast, and it should just start playing. I'm Michael Thompson, and that was Fear and Greed. Have a great day.